In a fast-paced economy like the United States, where bills, credit cards, and digital purchases can quickly pile up, mastering smart money habits is not just about wealth, it's about peace of mind and long-term security. The path to financial stability begins with small, consistent actions that shape a responsible mindset. Building good money habits is what separates those who constantly struggle from those who quietly grow wealth with patience and balance. The first essential habit is budgeting with purpose. Most people think budgeting is about restrictions, but it's actually a map for freedom. Start by tracking every dollar that enters and leaves your account. Create a list of your necessary expenses like rent, food, and transportation, and separate them from wants like new gadgets or eating out. In the USA, many use simple apps such as Mint or YNAB to visualize their cash flow. Once you see where your money goes, you can make mindful choices instead of emotional ones. The next key habit is paying yourself first. Before paying any bills or buying anything, transfer a small portion of your income, no matter how little, into a separate savings or investment account. Treat this as your personal financial growth tax. Over time, this habit builds the foundation of independence. Even saving $10 a day can become thousands within a year, especially if it's automatically transferred. Automation removes the temptation to spend and ensures steady progress. Another important habit is avoiding lifestyle inflation. As income grows, people often upgrade their lifestyle: bigger homes, newer cars, or more expensive vacations. While it feels rewarding, it delays financial growth. Instead, maintain a modest lifestyle even as your income rises. This is a common trait among financially independent Americans. They quietly save the difference and let compounding work for them. Debt control is the fourth essential habit. Credit cards can be useful for building credit, but only when used wisely. Pay your balances in full each month to avoid high interest charges. If you already have debt, create a clear repayment strategy. Focus on paying off the smallest debt first to build momentum, or the highest interest one to save more money long term. Both methods work as long as you stay consistent and avoid new unnecessary debt. The fifth habit is building an emergency fund. Unexpected situations like job loss, medical bills, or car repairs can happen to anyone. Having even 3 to 6 months worth of living expenses in a separate account prevents stress and protects you from borrowing at bad times. This simple buffer gives confidence and stability, allowing you to make rational choices when life becomes uncertain. Next comes investing wisely, which doesn't always mean taking big risks. Start with low-cost index funds or retirement accounts like 401ks or IRA letters that match your income level. These tools let your money grow while you sleep. Long-term, consistent investing often beats risky short-term bets. Understanding the difference between saving and investing is what turns a stable income into growing wealth. A powerful but often overlooked habit is continuous learning. Financial education never ends. Read books, follow reputable finance channels, and take online courses to strengthen your understanding. The U.S. financial system offers many opportunities, but without knowledge, even good income can vanish. Learning about taxes, compound interest, and market behavior helps protect and multiply what you earn. Mindful spending is another cornerstone. Before any purchase, ask, do I really need this? Or am I just reacting emotionally? Americans are surrounded by constant marketing that encourages spending on impulse. Training yourself to pause before buying builds discipline and clarity. It's not about denying joy, it's about knowing that lasting satisfaction comes from security, not short-term excitement. The next vital habit is tracking net worth. Many focus only on income, but your true progress is measured by how much you keep and grow. Create a simple chart of all your assets, cash, savings, investments, and subtract your debts. Review it monthly. Seeing progress, even in small steps, boosts motivation and helps you make smarter financial decisions. Then comes setting clear goals, whether it's saving for a home, building a side business, or retiring early. Define your goals with deadlines and amounts. Vague wishes like I want to save more rarely work, but a goal like I'll save $5,000 by December gives focus and direction. When goals are clear, habits naturally align with them. Lastly, cultivate the habit of gratitude and patience. Money grows with time, not pressure. Avoid comparing your progress to others on social media. Every financial journey is unique. What matters is steady improvement, not overnight success. When you're grateful for what you have, you make better financial decisions without frustration or greed. Smart money habits are not about perfection, they're about direction. Every small choice compounds into a major impact. A dollar saved today is more than a dollar earned tomorrow. When you live intentionally, spend mindfully, and plan ahead, financial independence becomes a natural outcome. It's not about luck, it's about discipline, awareness, and consistency. In the USA, where opportunities and temptations exist side by side, those who master these habits quietly build the life they want: stable, secure, and stress-free. Wealth is not just what's in your bank account. It's the calm that comes from knowing your future is under control. Building on the foundation of strong financial habits. True independence comes from deep consistency and understanding how every small action compounds. Over time, in the United States, where financial opportunities are abundant, but expenses are equally high, mastering advanced money habits transforms not just your bank account, but your mindset. It's about turning awareness into long-term growth and stability. One of the most powerful habits is automating your financial life. Automation takes emotion out of money management. Set automatic transfers to your savings, investments, and bill payments right after your paycheck arrives. When your money moves automatically toward your goals, you remove the daily temptation to spend and ensure that your priorities come first. Many financially successful Americans treat automation like a silent assistant that keeps their plan on track without constant supervision. The next advanced habit is living below your means but within your goals. This doesn't mean deprivation, it means designing a lifestyle that supports progress instead of limiting it. For example, if your goal is to save $1,000 a month, build your spending plan around that target. Most people do the opposite, they spend first and save what's left. The wealth builders reverse that formula. They save first and spend what's left after saving. This small reversal changes everything over time. Diversifying income sources is another core habit of financially stable people. In the USA, depending on a single income stream can be risky, especially during economic shifts or job loss. Look for small, practical ways to add new income. Freelancing, online tutoring, or offering services through platforms like Upwork or Fiverr are examples. Even a few $100 extra per month can speed up debt repayment, build savings, or fund investments. The key is to use your skills to create value in ways that fit your schedule. A crucial money habit is understanding the psychology of spending. Many financial decisions are emotional, not logical. Advertisements, discounts, and trends play on impulse. By being aware of these triggers, you regain control. Create a personal rule such as waiting 24 hours before making non-essential purchases. This simple pause reduces emotional spending and keeps your focus on long-term goals rather than short-term pleasure. Reviewing and optimizing your expenses every few months is another habit that can quietly add hundreds of dollars back to your budget. Check your subscriptions, recurring payments, and unnecessary upgrades. Most Americans pay for apps or services they no longer use. Canceling them isn't just saving money, it's simplifying your financial life. This regular audit keeps your financial plan lean and focused. The next habit is strategic investing. Avoid chasing quick profits or following trends. Instead, build a long-term plan through reliable tools like diversified index funds, ETFs, or mutual funds with a solid track record. Another essential habit is protecting your credit score. In the US, your credit score affects nearly everything: loan approvals, housing, even job opportunities. Pay your bills on time. Keep your credit utilization under 30% and avoid unnecessary credit inquiries. A healthy credit profile is a silent asset. It doesn't just open doors. It saves you money through lower interest rates and better opportunities. Tracking progress regularly is another habit of financially disciplined individuals. Review your savings goals, investments, and net worth monthly. Progress isn't always linear, but tracking it keeps you accountable. Even a small upward trend shows growth, which motivates you to continue. Think of financial tracking like health checkups. It prevents small issues from becoming major problems. Learning the art of negotiation is also a valuable financial habit. Many expenses in life are negotiable, from insurance rates to phone bills to rent renewals. Polite but confident negotiation can reduce costs significantly. Americans often overlook this simple practice, yet it can save thousands over a lifetime. The principle is to ask, research alternatives, and approach discussions respectfully. The next money habit is building financial resilience. Prepare for uncertainty by balancing short-term needs and long-term goals. Keep your emergency fund untouched for real emergencies. And consider low-risk investments that provide stability. Resilience means having the flexibility to adapt when life changes. It turns financial pressure into manageable adjustment. Continuous self-improvement plays a silent, yet powerful role in wealth building. Financial independence grows from the mind first. Focus on learning new skills that increase your earning potential. Take online courses, read books, or follow credible financial mentors. Each new skill is an asset that compounds over your lifetime. The more value you create for others, the more stable your income becomes. A critical but often ignored habit is practicing delayed gratification. Wealth doesn't grow instantly, it builds through patience. Avoid get-rich-quick ideas or unrealistic shortcuts. Instead, appreciate steady growth. When you learn to enjoy the process of saving and investing, money stops controlling you, you start controlling it. Giving back responsibly is another enriching financial habit. Supporting community causes, charities, or local initiatives strengthens purpose and gratitude. When you share a portion of what you earn, it creates a healthy relationship with wealth. It reminds you that money is a tool for good, not an identity. Many financially successful people say their sense of peace comes not from how much they have, but from how meaningfully they use it. Staying organized is also vital. Keep digital and physical records of your income, expenses, and investments. Use tools like Google Sheets or budgeting apps to simplify the process. When everything is clear and accessible, decision-making becomes easier and less stressful. Clarity leads to confidence, and confidence supports growth. Lastly, maintain a long-term vision. Financial success doesn't come from short bursts of motivation, it comes from sustained effort. Guided by clear goals, the American financial landscape rewards consistency and discipline more than luck. Stay calm through market ups and downs, and remember that slow, steady progress is the most reliable path to independence. The journey to financial stability in the USA isn't about perfection or high risk, it's about smart, ethical, and patient decisions that lead to peace of mind. Every smart money habit, from budgeting to learning, builds a foundation of trust between you and your financial future. When your habits align with wisdom and self-control, money becomes a source of stability instead of stress. Over time, these small daily habits shape not just a comfortable lifestyle, but a meaningful, balanced, and independent life free from unnecessary worry and built on steady growth.